What's up, world? This is Stocks in the Streets, where we focus on pure investing without the baking soda, boric acid, or all the other crap that analysts try to throw your way. Simply put, we give it to you straightforward, no cut, investing made simple. Let's say one day you woke up and went to check your bank account, and the bank had made a mistake and accidentally added 100 racks into your account. What would you do? Would you call them like, hey, you guys made a mistake. You've put too much money in my account. You need to take it out. Would you go to the bank and immediately make a withdrawal? I don't know, and I can't answer that question for you. But what I can do is tell you how to make your money work for you so that you can have a continuous stream of funds into your account when you come around to the point of retirement, regardless of where you are right now. So back to this hypothetical. So let's assume there you are, sitting there with 100 racks cash. It doesn't matter if it came from the bank or a bank error, if it was a gift, if you hustled for it, or if you hit a lick. Either way, it's yours. Now, my next question is, what are you going to do with that money? Do you pay off your house? Do you buy a new whip, a supercharged motor for your old school drop? Maybe you're already riding clean and you just want to grab a new set of 4Gs. Can't go wrong with 4Gs, right? Now, some of you may be asking yourself, why do I make so many automobile references? Well, that's because when I was younger, that was my mindset. We didn't have much when we were growing up, but I didn't complain because we always seemed to have just enough. I mean, the lights stayed on. I had a place to sleep. I had my people, my family, I'm certain my family did the best they could to raise me and teach me right from wrong. But unfortunately, the whole financial side of things really wasn't talked about. I never learned anything about managing money. I didn't learn about investing until later on in life. By the time I was a teenager, I felt like I had life all figured out. I went out, started making my own decisions. And I'll say when I was a late teen, maybe in my early 20s, I managed to turn a few numbers and do a little bit of this and a little bit of that. And quite honestly, I probably had too much money for my own good. Like, I know without a doubt in my mind that I tricked off over 100 G's in a year before. It's crazy, right? I'm sure some of you watching this video have blown through way more than that and didn't even trip about it. But I've always had a love for cars. So I always wanted to have a couple of toys to bring out at night in a cool little under bucket with some tents for the daytime. But since I was never taught what to do with money, when I had a little, I pretty much wasted it all on stuff, cars, a little bit of jewelry, coats. The Gucci jackets were big back then. But anyways, all that stuff just depreciates and it doesn't bring you any additional value over the years. Now, if you can relate to some or even most of what I just talked about, then you probably understand how the game goes, how the game works. And if you understand the game, then you pretty much already understand how the stock market works. Allow me to begin explaining. Let's say it was time for you to re-up and you got on through a friend of a friend. But by the time they got to you, you realized you had a whole bunch of Reggie. Now, of course, you're going to be disappointed. And let's assume that they've already disappeared and your money is gone also. It happens. It's the name of the game. We all take L's every once in a great while. Well, the same thing is going to happen in the stock market. You will take some L's. Now, imagine that a slightly different scenario. You gave somebody some paper to get on for you. And let's say you just sent them after a zip. Right. Now, that's not all your bread, but that's a little bit that you had to invest towards whatever you got going on. So they come back. We'll assume it's some Reggie again. Now, you're still going to be pissed, but you didn't take as nearly hard of a hit because you didn't have everything right there. You didn't give them your all. That's what diversifying your portfolio is all about. Now, this is a term you're going to hear a lot. You're going to hear people on TV talking about it. You'll probably have friends, maybe family. You'll read articles talking about diversifying your portfolio. Basically, all they're saying is don't put all your eggs in one basket. Taking L's are part of the game. How you bounce back from it is what's going to determine the extent to which you're able to shine. So if you've ever taken an L in a game, you know what it feels like to take an L in the stock market. Nothing is guaranteed. Doesn't matter who or why or what it's caused from. Just always know there's a possibility that you can take a loss. Now, rule number 1 when it comes to investing: never, ever invest your money in a company that you don't fully understand. I don't care what your friends said. I don't care if you feel like you got a tip from somebody. I don't care what the analysts say, or in terms of you, it shouldn't even matter what I say. Unless you're fully in the know of that company and how it works, some of its intricacies, what the company has going on, product releases, you do not want to take, you don't want to spend your money or invest your money into that company. Now, going back to the concept of diversifying or kind of spreading your money about, it would be almost useless if I asked you to, hey, I need you to read and study 100 or 200 different companies and I want you to know everything about them. The reality is it's not going to happen. In fact, if you were going to look for any single company, if I may, or entity to invest in, I would tell you that you probably need to bet your money on the United States of America. I mean, think about it. We all know how much they hitting over the head for taxes. We know how much attorney fees are. We know how much it costs to pay post bond. We know how much it costs for speeding tickets. Here's the thing. The U.S. economy is going to continue generate money. We know that this is the richest country in the world. So instead of trying to figure out how to beat the U.S. economy, I think the wise thing to do is invest your money and grow with our economy. So of all the money that you invest, I am a firm believer that 90% of it should be placed in a Standard & Poor's 500 index fund or S&P 500 index fund. This index or this type of index is going to track the 500 largest companies in the United States, and you basically invest a little bit of money into each of them. This means that even if 50 of the companies have a bad year, you still have 450 other companies who may be having great years to kind of offset some of those losses. This is a straightforward way of diversifying without trying to become an expert in the market. Now, if you watched the video this far, I'm sure your next question is, where do I go to invest, or how do I do it? Well, first things first, if you do not have a 9-to-5 and have never had a 9-to-5, do not, I repeat, do not dump $100,000 into a brokerage account and try to buy stocks. If you do, I can guarantee that them people will be to see you. Now, hopefully you've got a legit paper trail for your money so your investments don't raise any red flags. So a brokerage account, or pretty much a broker, is a middleman. A broker is like that dude in the neighborhood who always knows somebody who knows somebody who knows somebody who always happens to have exactly what you're looking for. Well, just like in the streets, they are all hustlers. As long as you go through them, you best believe they will be taxing you. We'll just call this the middleman tax, just to simplify things. Well, that's the same way the game works. Now, in the streets, you may not find someone who is willing to turn you on to their plug. But when it comes to investing, the name of the game is a bit different. That's why I'm here to share my plug with you. Now, I mess with a few brokers for various reasons, but when it comes to getting started and just beginning to tinker in the stock market a little bit, I am a huge fan of the Robinhood app. Now, why this app? Well, for beginners, they don't charge a commission each time you trade. The other companies, you go to buy something, they hit you over the head. You go to sell it, they hit you over the head again. Trust me, over the course of multiple years, that adds up big time. But that's how they get their paper, that middleman tax. So about the Robinhood app, in fact, if you click the link in the description and sign up for the Robinhood app, check down below, you'll also receive one free share of a stock. It'll be a random stock, but it's free. It'll probably be valued anywhere from $3 on up. Worst case scenario, you can sell it and grab a little something. I don't know. But anyways, once you have the app, there are 3 S&P 500 funds that I want you to add to your watch list within the app. The ticker for each of those funds is VOO, IVV, and SPY. So check out my next video as I explain the significance of these 3 options. Again, this is Stocks in the Streets, taking out the soda and the B12, no cut, investing made simple.